2. Today we are going to be talking about title insurance, and we're super excited to bring all of this detailed information to you. One of the things that we're just going to start off in the beginning, that the point of our podcast is of course to give you entertainment, but also to educate and inform you as the real estate agent, so that while you're out there fighting for business, you have the knowledge base to stand out in front of the crowd.
So quickly, go grab a pen and paper
so you can take notes and be ready for your next listing presentation. So today, like I said, we're talking about title insurance, and basically title is the foundation of real estate ownership. Like, that is so important for you to understand. And these policies that we're going to be talking about today are covering the future of that property, or the future of the owner or lender of that property. So
correct. So in Florida, we have 2 types of policies that we issue at closing. So we have your owner's policy and we have your loan policy. So actually your loan policy, of course, pretty standard in the word, right? It covers your lender. Anybody or any entity who is lending those financial funds for the purchase of the property.
Right.
So it can be a traditional lender, it can be a private lender, it can be even a for sale by owner, seller financing type of transaction. Any entity that wants to basically guarantee their interest in your home with these funds that they are lending you.
Right.
So of course, when we have a loan policy coverage, us as the title company, we are guaranteeing them that they will be in first position. Now, what does that mean, first position? Why are you mentioning that? Well, you have all types of different positions. You have first, second, third, fourth. So they always want to make sure they're in first position, because if for whatever reasons, there's some difficult hardships going on, or you decide to not stop paying the mortgage, well, your lender wants to make sure that they're going to be paid out accordingly. Let's say in the future you want to put, solar panels on the home and you want to remodel it. Well, guess what? That second loan that you're taking out is going to be in secondary position, meaning if you guys fail to make payments, of course, they're going to come after the home. So there's all these different types of intricacies that are intertwined with your loan policy.
Right.
So we guarantee the lender at closing, hey, we're satisfying your seller's policy by making sure we're paying off that loan at closing. We're making sure that any debts associated with the seller are paid at closing, so then therefore we can guarantee that first position for the lender. It's definitely important. They want to make sure that their financial assets are covered.
Also, that we talk, I'm sorry to interject, but just because we're talking about a purchase, it doesn't always have to be a purchase. The loan policy is also good
for refinances.
That's
true. Yeah, good point.
Issue.
Definitely. Even too, when we've encountered quite a bit of transactions where they're refinancing and they don't want to pay off their solar panels. That's okay. I mean, depending on the company, we investigate and figure out if they're willing to subordinate, meaning are they willing to go into second position again after your new loan comes out. Some companies allow it, some don't, but that's of course why we're always involved. We keep you guys informed of those type of situations.
We do.
Additional to your lender policy, we have to add on potentially endorsements. What are endorsements? So, of course, there are like extra coverages that we specify on certain topics that guarantee the lender, again, their position on that property. So, for example, we have 5.1. That is our planned unit development endorsement, meaning that particular property has a homeowners association.
Right.
What does that mean? If you guys don't make your payments or the clients don't make payments, well, now they can potentially put a lien against the property. And again, we want to make sure they're going to be either in second or third position while your lender remains in first. We have the 8.1, which is our environmental, making sure the minerals, all that good stuff is covered. Earth can be unpredictable at times, so we want to make sure we have homeowner coverage on that as well. Of course, then we have our Florida Form 9, or the FF9 as for an abbreviation. That one actually goes in regards to a survey. So that's why we typically always need one in a transaction, not only for the client's purposes of knowing their boundary points and what belongs to them and what doesn't, but also to the lender. We're guaranteeing them, hey, we did a survey against the property. We verified that there are no encroachments. There are no easements. There's nothing that could potentially jeopardize their ownership, meaning someone else's boundary points are crossing over onto yours. So we always want to make sure we're reviewing those at the table with clients as well as when we're issuing the policies.
Yep.
And then of course, on your other type of transactions, we have the 4.1 condo endorsement. So maybe you don't have a planned unit development rider or a planned homeowners association, but we have a condo. You own airspace, not necessarily land.
Right.
So we ensure that. You have your 6.1, which is your ARM endorsement. You have a variable rate. So we have to make sure that we're covering the lender for that type of transaction. We have the 7, which is the manufactured home or a mobile home. Those are additional coverages because not only are you owning the land that we're insuring, but now you actually own the physical mobile home or manufactured home that's on top of the property.
Right.
And then of course there's like all types of coverages. So, you know, you have like those unique cases, most likely your lender wants additional coverage just to make sure that they're protected. So that's part of our coverages for them.
And we also, we stay in contact with the lender. So you as the buyer or the borrower in this situation, you don't have to necessarily worry about it. You know, title and the lender is going to be in communication throughout the entire process.
Yep.
So if any of these endorsements are necessary or required by the lender, they will let us know and we will make sure that it's taken care of.
Exactly. Another thing too that we are responsible for and we guarantee with this policy is the recording of those instruments that you sign at the table, meaning your mortgage instrument. What does that really entail? Well, like, you know, we always mention, if you make a payment, then of course you are not abiding by your agreement with your lender. Therefore, they're gonna start sending you, really nice letters stating, hey, you owe us some money. And eventually, of course, they'll go to the courts with the mortgage instrument that we recorded at the table saying, hey, I had an agreement, this isn't being complied with, I want possession back of the home. So there's actually a couple of things that, we work with hand in hand, not only with your lender or your agent, but also you. We keep you informed as to what's going on, and then obviously at the table, all those beautiful stacks of documents that you sign with us, they're just reiterating the same information.
Yep.
Now, just like your loan policy issues coverages for your lender, we have an owner's policy.
Right.
What exactly does that cover?
So the owner's policy basically covers the future owner of that property. So the best way that I can describe this is to kind of give a couple of examples about scenarios that could arise, whereas an owner's policy would be instrumental in making sure that you're covered. Now, one thing that I think we didn't touch on before I get into this that I want to make sure that we talk about real quick is that these policies, they're paid for one time at closing.
Yep.
They're not something that you have to pay for continuously every month or every 6 months or every year.
No.
It's one-time payment,
payment
at closing. So the owner's policy, let's talk about a couple of different things. First of all, it's covering the future, like I said, against any previous debts or liens from the previous owner of that property. So let's talk about liens. A good example of that is HOA liens. Or we talked about the 5.1 endorsement on the loan policy, meaning that there's a homeowners association in where that property is located. Now, if the previous owner was not complying with the rules and regulations of that homeowners association by not paying dues, or they painted their house the wrong color and there was a lien for that, or anything crazy like that, this policy would take care of that. Anything that had to do with the HOA from the previous owner, the owner's policy would now you would be covered basically for that. So that's HOA liens. We talk about errors. Let's say, for instance, the deed was recorded and the vesting was incorrect, or the names were misspelled, or the legal description was incorrect, and that's a big one.
That's a really big one.
The owner's policy would cover the new owner with that. So make sure that you have the owner's policy to cover for errors. Let's talk about, so we talked about the HOA liens. Let's talk about mortgages. So the previous mortgage of the previous mortgage for the previous owner of the property should have been paid for in full by the time you took ownership of this property. That is what title does. We make sure that all of those liens and previous mortgages are paid for in full. let's say for instance, there was a situation whereas for some odd reason, a mortgage was not satisfied. And let's say it was a private lender, and I'm only throwing this out there because I had that
Did you just deal with a
situation.
situation like that?
So basically, we have the sale of a property. I'm sorry, no, it's a refinance. And somehow there was a private lender that never issued or recorded a satisfaction for a mortgage. And so we're talking to this borrower and we're like, do you know who this person is? And unfortunately, the person who took out or borrowed the funds passed away. And she had this was his wife. She had no idea who this person was. And so what I had to do was put on my,
Private
investigator hat. And I was Googling and I was doing all this stuff. Well, finally, I found his daughter's name, the lender's daughter. And I just typed her name into Instagram and she popped up. And funny enough, I saw that she had a couple of different Instagram pages, one of which was a business. And so I went onto the business's page and I found the lender's name. And so I called the business and I got to find that it was like a beautiful moment because I found this guy. But I was able to speak to him and we had a long conversation. He was like, man, how is that guy? He bought this house way back when. This is like 20 years ago. And I'm like, yeah, well, unfortunately, the gentleman is no longer with us, but we need this satisfaction. He was like, yeah, okay, no problem. Send this document over to me. And I was able to send it to him and, we got it taken care of. So those are the type of situations that if not taken care of, the owner's policy would have taken care of.
Exactly, because those are potential unforeseen issues that may arise.
Exactly.
Now, we went over liens and we went over association liens, but you know which one we didn't mention?
What?
The contractor's liens.
Oh.
So when we have, of course, your clients putting on a new roof, they're doing some plumbing,
new fence,
anything like
new
that.
Pool.
Oh, the pool, those are intense. So
solar
any
panels,
kind of work,
any
work that you need to hire a contractor for, a licensed contractor for, the county is going to require them to file a notice of commencement. That is going to go against title or AKA the property.
Yes.
So those are definitely some liens that can potentially arise, which we handle at closing when we start calling those contractors and we're like, hey, you did such and such work, have you been paid for it? Are you done with the work?
Right.
Is there anything that we owe you? And if they've answered no to all those questions or yes to all those questions, we'll take it from there. We'll send them whatever documentation they need to execute so we can record at closing and confirm this work that they've stated that they're starting has been done and paid for, so there are no liens.
But if for some crazy reason that wasn't taken care of, then this owner's policy would go ahead and take care of that as well.
Yep.
So we'll talk about heirs.
Oh.
Talk about probate.
Oh,
That can be a headache.
However, just a little bit.
If for some reason Michael Jordan, I'm just using that name out there, he comes out and says, man, that house belonged to my grandfather and it was supposed to be mine. I don't know how you own this house. Then the owner's policy again would come into play. I know, didn't you have a situation with probate?
Oh, yes. So I actually had a investor who likes to purchase and flip. So she purchased this property, they were doing a remodel on it, and maybe like a couple months after closing, she gets served with a subpoena.
Whoa.
So of course she's like freaking out. She's like, what is this about? And it was because the client or the seller at the time that she was purchasing falsified that she was legally married to the gentleman. And the gentleman had passed away. Meaning she bypassed probate. So of course, the children of the gentleman came back into the picture and actually sued her for their rights. So unfortunately, my investor had to hold on to that property for probably about like 2 years while this was in court. And they kind of were going over everything and picking apart all of these files just to come out to find out that she actually sold multiple properties like that. So it was a pretty interesting case, of course, that the owner's policy covered,
Right.
but still it caused a huge headache for her. And then at the end of the day, you know, all parties involved, because you don't want to be served with a subpoena to the property that you just purchased. And you know, a lot of these clients of ours, unfortunately, they're great in the aspect of like, you know, they're super happy, but they have blood, sweat, and tears into these properties. You know what I mean? A lot of people work hard. You save every nickel and penny. You know, a lot goes into those type of transactions where, you know, we all make it happen. At the end of the day, it's a common goal. We want everyone to close and be happy, and you know, that's part of why we do this. We want to guarantee that they won't have any future headaches.
Right. And that's why it's really important for you guys as agents out there to choose the right title company that knows the ins and outs and the documents and what needs to be done and what can't be done. Not the legality, but you know, the intricate details that have to go into documents to support you guys. We are here to help you look amazing. So use our knowledge, you know, suck up everything that we know and we tell you guys, because it's really important. It's going to help you and your business, because imagine how impressive it is to a potential client that you know all of these details because, you know, we taught you. So.
Yeah, it's true. You know, you have these clients when you go have these listing appointments that they're like, well, this is my current situation and what I'm going through. And if they have that information up front, we know how to handle that. It's gonna be a smooth sailing and a smooth transaction.
You know,
and your client already knows up front what to expect.
Yeah, because you know what questions to ask. You know, these are the details that title is gonna need. So make sure you have this document ready or that document ready. You know, that just helps you out. So definitely make sure that you take all of this knowledge that we suck up. So we talked about loan policy, we talked about the owner's policy, we talked about it being a one-time fee at closing. I think we gave some pretty good examples of both situations.
Right. I don't think
I'm sure we can find ton more examples, but I think we gave
generic ones and
a couple of good generic ones. Yeah.
Let's see here.
Well, listen, we don't want to keep you guys too long. Again, the point of our podcast is just to give you guys as much information while entertaining you in the meantime. We know that everything that we kind of went over was a lot of information, so feel free to give us a call if you have any questions at all. Our number 407-537-9513. Talk to anybody. We're here to help. Be sure to subscribe and like and send our
notification button so you know we're on.
Yeah, we are definitely putting out our videos every couple weeks, so we want to give you as much detail as possible. And in order for you to get the details, you need to watch our videos. So make sure to subscribe and stay tuned for our next episode.
And of course, if you were interested in what you heard today and really want to know more, or you feel like your team and your brokerage need to know more, feel free to reach out to us. We can always schedule an online training with everyone, or we are more than happy if you're local to, you know, go in person and meet the team, and you guys can pick our brains and we can pick yours.
Yep, and we love to talk, we love to educate. So
I think if you start getting on the topic of title insurance and title and what we do, I'll be here all night.
Yeah, we'll be talking all night. So we just talked a little bit about this, but you guys have a great day. It was great speaking with you, and
thank you.
That's it.
And thank you guys for listening.
And that's a wrap.